Everyone says AI trading bots can make you rich while you sleep. But do they actually work? I spent the last month testing the most popular AI trading bots with real money. The results were not what I expected. Some made money, some lost money, and one did something completely unexpected. Today I am breaking down exactly what happened. Let us get into it. First, let us understand what AI trading bots actually are. These are computer programs that automatically buy and sell stocks, cryptocurrencies, or other assets based on pre-programmed rules. The AI part means they can learn from market data and adjust their strategies. There are two main types. Rule-based bots follow fixed instructions. Machine learning bots adapt based on patterns. Both promise to remove human emotion from trading. But do they deliver? There are four main types of AI trading bots. First, grid trading bots. They buy low and sell high within a price range. Good for sideways markets. Second, momentum bots. They buy when prices are rising and sell when falling. Good for trending markets. Third, arbitrage bots. They exploit price differences between exchanges. Fourth, machine learning bots. They analyze patterns and predict future movements. Each type has different strengths and weaknesses. Understanding which one you need is critical. Here is the real performance data from major trading bot platforms. TradingView bots averaged 8% annual returns in 2025. That sounds good until you compare it to the S&P 500, which returned 10.8%. 3Commas reported average user returns of 12%. But that includes users who stopped using bots after losses. When you factor in all users, the average drops to 6%. Pionex users reported average returns of 15%. But the platform has only been around for 2 years. Not enough data for a real conclusion. I tested 3 bots with $1,000 each over 30 days. Bot 1 was a grid trading bot on Bitcoin. It made $42, a 4.2% return. Not bad. Bot 2 was a momentum bot on the S&P 500 ETF. It lost $28, a 2.8% loss. Bot 3 was a machine learning bot on a basket of tech stocks. It made $67, a 6.7% return. Total across all 3 bots, $81 profit. Sounds good, right? But here's the catch. If I had just bought the S&P 500 ETF and held it, I would have made $108. The bots underperformed a simple buy and hold strategy. Here is what the bot platforms do not tell you. First, trading fees. Every buy and sell costs money. A bot making 50 trades per month pays hundreds in fees. Second, subscription costs. Most good bots cost $50 to $200 per month. That eats into your returns. Third, taxes. Each trade is a taxable event. Short-term capital gains taxes can eat 20 to 30% of your profits. Fourth, slippage. The price you see is not always the price you get. These hidden costs can turn a 10% return into a 2% return. So who should actually use AI trading bots? First, experienced traders who understand the risks. Bots are tools, not magic. Second, people with large portfolios where small percentage gains matter. Third, those who can afford to lose the money they put in. Who should not use bots? Beginners. People who cannot afford losses. Anyone looking for guaranteed returns. There are none. And anyone who thinks bots are passive income. They require active monitoring and adjustment. Here is the truth most bot sellers do not want you to hear. For most people, a simple index fund strategy beats AI trading bots. Here's why. Index funds have zero management fees beyond the expense ratio. They have zero trading fees. They are tax efficient because they rarely trade. And historically, they beat 85% of professional traders over 15 years. The boring strategy of buying and holding the S&P 500 is still the best strategy for most investors. Bots add complexity without guaranteed returns. If you still want to try AI trading bots, here's my advice. Start with paper trading. Most platforms offer this. Do not use real money until you understand how the bot works. Set strict loss limits. Never risk more than you can afford to lose. Diversify across multiple bots. Do not put everything in one strategy. And most importantly, do not expect passive income. Bots require active monitoring. Check them daily. Adjust parameters. And be ready to turn them off if the market changes. Here is the bottom line. AI trading bots are not magic money machines. Some can make money, but most underperform a simple index fund strategy. The hidden costs eat into returns, and they require active management. If you are a beginner, stick with index funds. If you are experienced, bots can be a useful tool in your arsenal. But never forget, the best investment strategy is the one you can stick with. And for most people, that is still buy and hold. Let me break down the top platforms. TradingView is the most popular with over 50 million users. Their built-in bots are free but limited. 3 offers more advanced strategies with a $50 monthly plan. Pionex has 0 trading fees and built-in bots. That makes it attractive for small accounts. CryptoHopper offers the most customization but costs $80 per month. And Algorand is for serious traders with $200 per month. Each platform has different strengths. The key is matching the platform to your experience level and budget. If you decide to use AI trading bots, risk management is everything. Here are the rules I follow. Rule 1. Never risk more than 2% of your portfolio on a single bot. If you have $10,000, that means $200 maximum per bot. Rule 2. Set stop losses. Every bot should have a maximum loss limit. 5% is a good starting point. Rule 3. Diversify across at least 3 different bot strategies. Do not put all your eggs in one basket. Rule 4. Keep 70% of your portfolio in safe investments. Only 30% in bot-traded assets. These rules will protect you from catastrophic losses. Taxes are a hidden cost most people forget. Every trade is a taxable event. Short-term capital gains, assets held less than 1 year, are taxed at your ordinary income rate. That could be 20 to 35%. Long-term gains, over 1 year, are taxed at 15 to 20%. AI trading bots generate many short-term trades. That means higher taxes. A bot that makes 10% return might only net 6 to 7% after taxes. This is why index funds are more tax efficient. They rarely trade, so you pay fewer taxes. Unfortunately, the trading bot space is full of scams. Here are the red flags. First, guaranteed returns. No legitimate bot guarantees profits. If someone promises 20% monthly returns, it is a scam. Second, pressure tactics. If they say you must act now or miss out, it is a scam. Third, unregulated platforms. Check if the platform is registered with the SEC or FINRA. Fourth, no track record. If they cannot show you audited historical performance, be suspicious. Fifth, celebrity endorsements. Most are fake or paid. Always do your research before handing over money. Looking ahead, AI trading will only get more sophisticated. Quantum computing will make bots faster. Natural language processing will let bots read news and social media in real time. And autonomous trading systems will make decisions without human input. But here's the thing. As more people use AI trading, the edges disappear. When everyone has the same AI, no one has an advantage. The future of investing is not about having the best bot. It is about having the best strategy. And for most people, that strategy is still simple diversification and patience. So what is my final verdict on AI trading bots? They are a tool, not a solution. Some can make money, but most underperform simple index funds. The hidden costs are real, the risks are real, and the time commitment is real. If you are a beginner, save your money. Put it in an index fund and forget about it. If you are experienced, bots can complement your strategy, but never rely on them alone. The best investment is still the boring one. Buy quality investments. Hold them, and let time do the work. Have you tried AI trading bots? What was your experience? Drop a comment below. And if you want to see more data-driven investing content, hit that subscribe button. We break down every strategy with real numbers. The data does not lie, but the market moves fast. So stay informed, stay disciplined, and as always, this is not financial advice. Do your own research. See you in the next one. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.